Want to earn passive income and never pay taxes on it? Sounds too good to be true? It's not if you know how to use the tax code the smart way. In today's video, we're going to show you how to legally generate tax-free income using Roth IRAs, Solo 401ks, and a little-known strategy called the ROBs. Let's break it down, step by step. Welcome to Smart Money Effect, where we turn complex finance into simple strategies to help you build wealth. If you're ready to make your money work smarter, hit that subscribe button and let's dive in. What do we mean by passive income? Passive income is money you earn without actively working for it every day. Think interest, dividends, rental income, capital gains, even certain side business income. But here's the kicker. Most of it gets taxed, unless you know how to shelter it inside of certain types of accounts. The secret power of self-directed accounts. The tax-free machine. A self-directed Roth IRA is like a legal tax loophole. You contribute after-tax dollars, and then it grows, completely tax-free. That means all your passive income, whether it's rental checks, dividends, or other alternative asset gains, can be withdrawn later with zero tax. It's the ultimate tool for long-term wealth. Self-directed IRAs and Solo 401ks allow you to invest in alternative assets like real estate, private companies, and even crypto. Unlike traditional retirement accounts, these give you full control. And if you use a Roth version, that income can be 100% tax-free once you're over 59 and a half. If you're under 59 and a half, don't worry. You can't withdraw tax-free yet, but all that passive income still grows tax-free inside your Roth. So your money is compounding without the IRS taking a cut. That's how the wealthy get ahead. Let's say you invest in a rental property using a Roth. You collect $1,500 per month in cash flow. Normally that's taxed, but in a Roth IRA, you keep every dollar. Then there's the ROB strategy, where you can generate tax-free business income. ROB stands for Rollover as a business startup. It lets you use retirement funds to start or invest in a business, tax and penalty-free. The business pays corporate tax, but dividends flow back to your 401k or Roth 401k tax-free. And yes, you can even pay yourself a salary. If you're planning a side hustle, an e-commerce business, marketing, or a consulting firm, ROBs can be your best friend. Remember, private dividends, interest, and rental income is taxed. So keep these inside a Roth IRA or Solo 401k and structure it smart, like using a C Corp blocker for business income. Invest in real estate within a Roth Solo 401k. Engage in peer-to-peer lending in a Roth IRA. And it all grows tax-free. That's the smart money effect. Stay tuned for the next videos where we dive deeper into these tax-free strategies. If you learned something today, smash that like button, drop a comment if you have questions, and subscribe for weekly strategies on wealth, investing, and financial freedom. Your future self will thank you. We'll see you in the next video. Remember, it's not simply about working harder, it's about working smarter.